Hello everyone. Today I will be conducting my lesson on the technical analysis of cryptocurrency. Cryptocurrency is a digital currency in which transactions are verified and records are maintained by a decentralized system using cryptography. Essentially, it is a peer-to-peer connected network where no single entity has authority over that network. As you can see from the image, there is a visual representation of a centralized and decentralized network. Cryptocurrency falls into the decentralized structure as it is not controlled by a central entity and is instead connected in a multi-peer connection network. This lesson will equip you with the information to cover the basics of technical chart analysis. By understanding technical chart analysis, it will enable the skills to solidly predict price changes of high volume tokens in the cryptocurrency market. An example of a high volume token is something such as Bitcoin, where many buy and sell transactions have occurred over the years. The reason why we are investigating high volume tokens is because the amount of data will be more precise with less randomness overall. The objective that we'll be covering today in this lesson is to learn how to analyze technical analysis techniques and terms in order to predict or identify the price action of high volume cryptocurrency tokens. Before we learn about the fundamentals of technical analysis, I would like you to get familiar with some of these common terms that are used when doing technical analysis and will help you follow along the content provided. Price action. Price action is the price movements of a financial asset over time. In this case, we will be analyzing the chart and make predictions based on technical analysis techniques or cues in order to determine future price action. All-time high. All-time high is known as ATH, and it is the highest price the token has ever been. As you can see in the chart provided, the cryptocurrency Bitcoin was at an all-time high of approximately $68,500 US per Bitcoin. Support. Support is a price level where a downtrend can be expected to come to a halt because the buying demand or buying interest at that level is greater than the selling of the asset. Resistance level. A resistance level is the point on a price chart at which the upwards price action comes to a halt because the inclination to sell the asset is greater than the buy interest. This occurs most often when people would like to sell for profit. Price action in the cryptocurrency market is generally determined by emotion. A way that we can interpret the buying or selling intent of traders is by looking at a candlestick chart. The real body of a candlestick chart is either green or red. Green indicating the price of the token went up during that set time period, or red indicating negative price action for that time period. As you can see by the left candle, the color green indicates that there was an increase in the price of the token from the preceding candle. Say for example, the price of the token went from 1 cent to 2 cents during the same time period. We would see that the real body would grow a green candle indicating an increase in price. The lower wick of the candles show that the tokens were sold, bringing bringing downwards price action and were later bought up in the same period due to the buying pressure from traders indicating some form of support. You can see the range the price was sold under the real body, between the open and the low of the lower wick. The motion that was shown by investors is hard to tell, as normally multiple candles and wicks are needed to dictate investors' emotions towards price action. But from the price change that we can see, that the investors or traders wanted to buy when someone sold during the same time period. If we continue on with this analogy that I brought up, we can state that the sellers moved the token price below the 1 cent threshold of the real body, but then more buying pressure came in to boost the price to above 1 cent, creating the lower wick. The price likely fluctuated, and then eventually the price closed at the end of the time period at 2 cents at the top of the real body, also known as the close price. Wicks also work the opposite way around. By looking at the upper wick of the left candle, we can conclude that the buying pressure went higher than the real body threshold of 2 cents. But because the selling pressure was greater above this point, the price eventually sold to where it closed at 2 cents per token. Now that we have a basic understanding of candlestick charts and some of the terms used for technical analysis, I'd like to show you an example of a recent Bitcoin candlestick graph with a support level and resistance level that I had drawn on it. To appropriately add resistance or support levels, we need to look for a relatively obvious level where buy pressure looks to be high as our support line, and a resistance level where sell pressure seems to stop upwards price action. As you can see from this graph, each candlestick represents a week's duration. I plotted these resistance lines and support lines to indicate the buy and the sell pressure from traders. There are qualities which allow us to find and visualize where we should set up the support and resistance lines. Do note that we need at least one of these qualities to see means of plotting a support and resistance line, or else the prediction could be incorrect. Generally, the more traits that can be identified will result in a more accurate resistance and support line. Any support or resistance level becomes more identifiable with more rejections it has received. A rejection can be either sell pressure is too high, so the price at a certain level will not go higher and will eventually decrease in token price, or buy pressure is too high that the token price increases. Seen in the graph, I plotted areas where sell pressure is too high in the red boxes and green boxes where the buy pressure is too high. The lower and upper wicks in these areas are a good indication of buy and sell pressure. High sell pressure having a large upper wick in the area are a good indication of buy and of sell pressure and a decrease in demand. Whereas a greater lower wick indicates massive buy pressure and an indication of upwards price action. One of the most important traits that we should always try to use is finding points in the chart that look easily recognizable as our support or resistance levels. The more obvious the change in price action and rejections, the better. A complex pattern is worse, as traders are less likely to interpret it as a support or resistance line, and therefore are likely not to trade using it. The more obvious, the better. When a support level or resistance level acts as both at different periods of time, it becomes noticeable by traders as the resistance line or support line is respected from both sides. This is quite common because it appears often in uptrends and downtrends for price action. As you can see, our resistance level also acts as a support level at a different period of time. The final trait to look at when plotting support and resistance lines is the swing high and swing low, which is essentially the high point or the low point in a price where reversal happens, where a downtrend moves into an uptrend or an uptrend moves into a downtrend. These other technical terms are used to describe the overall token market and how much demand there is to support it. Bullish is the term for an increase in demand for the asset, which likely results in a price increase. Bearish is the term for a decrease in demand for the asset, likely resulting in little buy transactions and a price decrease. With all tokens, buy and sells are common. No healthy graph has only buy or sell transactions. These terms are for describing the demand and are used quite frequently in the cryptocurrency market. A trend line is used to give investors a strong indication of where a token's price will move. A trend line is drawn over the swing highs or swing lows to show the strong direction of price. Trend lines are a visual representation of support and resistance in any time frame. Trend lines show direction and speed of price. I will not be talking about it in this lesson, but they can also describe patterns during periods of price contraction before outbreaks into the uptrend or downtrend. By looking at the trend line, we can see the swing highs and swing lows as it intercepts and how it can act as a resistance or support line. RSI is a momentum oscillator used to recognize overbought and oversold conditions. The way you calculate the relative strength index, or RSI, is by choosing a time period previously in the past. Generally, a time period of 14 periods is used to calculate the RSI. Calculate the average gains divided by the average losses over the chosen time period, and this will be our relative strength value, also known as RS. Not to be confused by RSI. RSI is displayed as a line graph that moves between two extremes, which is called an oscillator. Its reading can range from 0 to 100. The RS value is plotted on a graph between 0 and 100. This graph is then used in comparison to the normal candlestick chart that we see to indicate when it might retrace or reverse in a particular direction. To identify trend changes, there is two indicators for the traders to keep in mind: overbought and oversold. Overbought refers to the rapid price action in the upwards direction and may likely hit resistance and go lower. Oversold is essentially the opposite and refers to the rapid price action downwards and has potential for more upwards price action. Most investors in the marketing scene tend to think of an asset being oversold going below the 30 threshold on the RS graph, and then an indicator to buy emerges when it crosses above that value once again. You can see on this graph when an asset becomes oversold, it will decrease in token price demand, and then when it increases past this 30 threshold, as I talked before, it indicates that traders should buy the asset because there is an increase in demand and there's potential for profit to be gained. This investing method also works vice versa, in the way where investors think of the asset being overbought when RSI goes above the 70 threshold on the RS graph, and when it eventually downtrends and crosses it, that the threshold becomes an indication to sell off their assets because of the relative demand decrease. For these notes to remember, RSI is not to be confused with RS. RSI is a momentum oscillator ranging from 0 to 100. Indicators that traders use are oversold and overbought. Oversold lies on the 30 RSI threshold, and overbought lies on the 70 RS threshold. And RSI is generally calculated over time of 14 periods. It can be different, but it's generally a period of 14. Here is an example of where trend lines and RSI was used to calculate the price action of a Bitcoin graph. Here we can see the RSI, and here we see trend lines resulting in a convergence, which indicates that it's either going to be a price outbreak upwards or a price downtrend, which you can't actually see from the graph. If you can practice by identifying these patterns and traits, you should have good results of making accurate predictions with recognizing changes in price action for high volume cryptocurrency tokens. By having the skills to predict price changes relatively accurately, you should be able to predict future price action and have the skills to make good trades. What you must understand is that with any type of price-changing market, asset comes the chances of outside influences such as news or hype, and even certain levels of randomness that may disprove the chart techniques we've talked about. As with anything, practice makes perfect, so to get better with understanding the cryptocurrency market, you must try to implement technical analysis techniques or identify patterns and see for yourself if they were right or wrong, and ultimately learn from your analysis. To summarize this lesson, we've talked about what is cryptocurrency and how technical analysis traits can help us identify price action in the market, such as resistance and support levels. We've also looked at some of the basic techniques and how we can utilize them and plot them to predict price movement, and how to determine demand by looking at a candlestick chart. During this video, we've achieved our lesson objective of using these technical analysis techniques to predict price action with high volume cryptocurrency tokens. I've set up in the Moodle shell an exercise where you can try to identify some of the graphs set before you as practice and revise for future examinations. Thanks for listening.